Gold against US dollar, we can see that this week has started as a bullish one, and the price has bounced from this confluence of support. We can see it here, which was mentioned in the previous week analysis, and it was mentioned also that the price could retrace back up around this supply zone, and this is what has happened this week. We can see that the Monday has started as a bullish one, and then Tuesday, Wednesday and Thursday has pushed the price up, reaching 1980, a supply zone which is around this resistance area, and from there on a Friday the price has dropped down. The sellers who have pushed the price from these higher levels have exited their trades here, and this has triggered that the price returns back up. But then the buyers who have entered here also have exited their trades, because we can see this strong monthly currently resistance price level is here. It is triggered that the buyers get out, and this also has triggered that the price goes down. So the sellers have entered again into this trade. We can see this strong push on a Friday, which means there is strong selling pressure here, and there is no buyers around this area in between that could hold the price for a while. Then we can see that this candle on a Friday has closed below this uptrend, and also right here on this support level, and also on the demand zone. Let's see how this looks on a weekly time frame. On a weekly time frame, we can see that previous week, a week before this one, has closed below this uptrend, which was also information that the breakout to the downside has happened. After that, the price has returned back up, testing the previous support, now acting as a resistance, and it has bounced back down. This means for me that the price has lost its strength from the bull side, and there is a strong selling pressure. And also the critical level was here around this price level, where the price has tried to reach, and it has reached close to this one. But also the buyers who are waiting here have pushed the price that has retested the previous support, now acting as a resistance. So the price on a weekly time frame is in between 1979 and 1903 price level. Let's see how this looks on a monthly time frame, because we have 1 month ended, and we can see that this previous month has ended as a bearish candle. It is also engulfing candle. Let's put this one here only on weekly. Engulfing. Okay. I made a mistake, not on a weekly but on a monthly. Okay. It is a bearish engulfing bar, which is suggesting that the price will go down. So this month has ended as a bearish one, and it has ended below the critical 1979 area, and it is moving down to the downside. The critical level, we can see that the price is bouncing between 2072 and the lower side around 1928 price level. We can see this one here. So we can make also the analysis for the future months if it is possible, but we can see what is visible. And visible is that the current month has retraced back up, testing 1979 area here as the next resistance on a monthly time frame, but this was also only tested on a daily and weekly time frame. Until this month ends, we cannot say that this retrace has happened and tested as a support, as a resistance, because this month could also go above and closed as a bullish one. So what we can see on the monthly time frame is that the current market price is in between 1979 and 1903, and the critical level for the monthly time frame is 1927 price level. We can see it here, and the first one is 1936. As it looks right now, the price is heading down, and I am expecting that the price will go down, which we'll see on a weekly and a daily time frame. What are the critical levels? So the price is in between these two price levels, and until the month period ends and I see where the price will close, I'm still open to see the price bouncing between these two price levels. A closer look on a weekly time frame will tell us how this market looks. The market has returned back up, testing the previous support, now acting as a resistance, and it's bouncing back down. So the critical level is 1.26 price level, which I have mentioned just now on a monthly time frame, and the next one where the price could go is around this area, 1910. Which is the demand zone around this support level. So I'm expecting that the price will return back down and see the price first around 1927 and see how this week ends. If the weekly time frame closes below this price level, it will mean the next one is around here, 1910. The critical level for the bulls is this area here. If the price goes above, and I currently do not see that the price will go up, but everything can happen, it is very critical for the price an area around this area here, 1970, and on the upper side 1986. If the price goes above 1986 and closes the weekly time frame above, this will mean the bulls have recovered and we will see the price targeting 2000 price level. If we go to the daily time frame and see what are the critical levels, we can see that the critical level for the daily time frame is currently this one here, 1940. If we see on a Monday or Tuesday price closing below this one, the next level where the price will go is around this area here, which is 1920, which is below 1927, which I have just said on a weekly time frame. So the next one is 1920, and we will see what happens there. There is a probability that the price will bounce from this area and reach around this one here, just making a small retrace. So until this level is broken on the daily time frame, I am still waiting. On the upper side for the bulls, if the price stays here in between, the critical level for the bulls is this one first on a smaller time frame is 1957. If the price goes above and closes the day above this one, we could see the price going and reaching this supply zone where the sellers are waiting. So these are the critical levels on a daily time frame that we need to wait until the price broke them, and then we will see where the price will go. This is the trigger for the downside, and also this one is a trigger for the upside. If the price stays inside, it will bounce between these two price levels until the price makes a breakout to the upside or the downside. We can see that current on a daily time frame we have this uptrend, which is also broken on the weekly time frame. So if we based the analysis on a weekly time frame, the price will go down, but the critical level also for the weekly time frame is this one on a daily time frame. So it is also very important to see how the daily time frame will close. So the daily will trigger, and we have the targets on a weekly time frame, which is suggesting an area here and also an area here, depending where the breakout will happen. That is all from today's analysis. I hope you enjoyed. If you have any question, feel free to leave a comment. If you like the analysis, click the like button and subscribe. See you next time, and a happy trading.